Mr. Neeraj Kumar, the Group CEO and whole-time director of the company. Mr. Kumar, thanks so much for joining in on ET Now. Congratulations, numbers look pretty decent. So let's kickstart first by talking about that 10.5% sales growth. I understand that while there has been a decrease in production when it comes to pig iron and pipes, there has been an increase in pellet production. So if you could walk us through what were the key drivers when it comes to volumes?
Good morning, viewers. If you really see our third quarter result, and if you look at the last few quarters result, what we have been able to achieve, Jindal SAW as a whole, is a consistent high performance, and that is a combination of multiple divisions working in tandem. So for the last quarter, it is the pellet as well as the DI segment which has really contributed to the stable top line. One other thing that you have to look at is, at present, now having got a consistent 3 quarters performance, our effort is to make it stable and make sure that over the next 3 to 4 quarters, for which we have a very good visibility, maintain this momentum.
Okay, let's talk about your realizations then. I mean, if I have to talk about especially pellet, which did see quite a lot of price movement, in that October-November period, how were your realizations? If you could talk about individual segments as well as for Jindal SAW as a whole.
Average realization in general for Jindal SAW has improved in all segments. But as you know, we have got 4 divisions, and therefore to talk about a realization in any one segment would not be the best or would not be appropriate. But if you really look at our EBITDA margin, which is a sense of the margins that we get on a blended basis, that has also improved. So we have put in a lot of effort now on cost of production. We have put in a lot of effort on managing our raw material prices, as well as an improved NSR based on some tailwind getting from the government and the infrastructure spending. So in all, a good consistent performance which we are likely to maintain.
Okay, I must ask you about the raw material pricing trend. Lots of volatility witnessed between October to December, but you have managed to expand your margins. So what is the raw material pricing trend?
We have seen stable raw material prices, because as I have said earlier as well, we do follow a hedging strategy where we try and cover up for our raw materials either on a yearly long-term contract or on a project basis. Whenever we have a project, we immediately go and lock in all our raw material prices. So we have seen a stable raw material regime over the last few quarters, which continued quarter 3 and is likely to continue in going forward as well.
Okay, I want to also talk to you about your order book at the current juncture. How does it stand? What segments are you seeing increased order inflow from?
We have a very healthy order book in excess of $1.1 billion at this point of time, which largely constitutes of orders in the large dia, which is MS, as well as DI segment. These 2 segments typically have contracts and projects which goes for next 2 to 3 quarters. As far as the seamless business is concerned, we do have a very healthy order book, but there the supply is 6 to 8 weeks is what the customers expect. In the pellet business, we do not have an order book because largely that is a cash sale. So all in all, a healthy order book in excess of $1 billion, $1.1 billion to be precise, and a clear visibility of good projects in hand in all segments for the next 3 quarters at least.
All right. Seeing as the oil and gas segment are one of your key customers, as well as, of course, you do provide a significant chunk to the Middle East and the North African region, how are you viewing demand over there in light of whatever's been happening in the sector of late?
In India, if you see, GAIL has come up with a lot of tenders, and we see a lot of demand coming from GAIL. ONGC is one where now we would be able to cater even better, because as you know, we have commissioned our 16-inch seamless mill. So the seamless pipes and tubes would cater to the full range requirement of ONGC, which is essentially an oil and gas major. So in India, both combination of GAIL as well as ONGC should give us a very healthy demand on account of our increased product range. As far as MENA region is concerned, we are seeing reconstruction of Iraq, we are seeing some traction in Saudi, and we are also opening up some new markets for us in Africa. So at present we do see a very healthy demand both in our domestic as well as in the MENA region.
All right, Mr. Kumar, we leave it at that. Thanks so much for joining in on ET Now to explain your third quarter numbers. Decent growth on the top line, margins as well, and profitability too has jumped significantly.